So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot, they stop raising rates. They already started suggesting maybe we'll pause in September. My guess is June will be the last hike. And after that, they will say, well, we're just going to see, and we'll see the economy start going down the toilet. And they will start thinking, well, we're not going to do QT now either. So they're not going to start shrinking the Fed balance sheet. And before you know it, we're going to be talking about rate cuts, but we don't have many rates to cut, rates are nowhere. So the only outcome is they're going to have to print money. The credit markets are already starting to dry up. That's usually an indicator. The housing market's rolling over. That's a bad indicator.
Printing money is this stuff here. You have silver coin, you have a copper coin made silver, right?
That's right.
Basically, and it's called debasing the currency, which the Romans and Chinese already did.
Yeah, because don't forget, debasement of currency works in a simple way. If you're really thirsty and I have a bottle of water, you'll pay anything for it. If you're really thirsty and I've got 5 bottles of water, you're kind of thinking, yeah, I probably need some of that water, I'll buy them all, but at a lower price. If I say, here's 1 million bottles of water, you don't want any of it because there's too much water now. It has no scarcity. So if you make too much of something, it becomes less valuable. So if Da Vinci had created 50 million pieces of art, guess what? They're worthless. And so it's that concept. And what it does is if something gets devalued versus something else, so we're not making more shares in the S&P. Actually, what we're doing is buying them back, making less of them. Therefore, the S&P goes up. Real estate. Yes, there's periods where we try and create new real estate, but generally real estate prices go up versus the Fed balance sheet because it's a relatively scarce asset. Same with gold, same with crypto. So that's the phenomena.
So, Raoul, I'm trying to talk Kim into buying a bar because there's going to be a lot of drinking coming up.
Well, it depends how fast it is. It might be a lot of shots, but it's not going to be a long session. It depends how fast they deploy the balance sheet, because this balance sheet magic optically changes markets. And if markets go up, then household net worth stabilizes and spending comes back. Companies stop laying people off. So it's actually a bit of a magic trick, and it is a trick, right?
It comes down, that old saying, the bull goes up the stairs, the bear goes out the window.
Yeah.
So, but the bear is about to go out the window. The question is, when does a bull start climbing again, right? Is it kind of what
right. And we either go through a scenario like 2000, which was a typical old school recession where, equity markets, unwound excesses, the bear market was 18 months or so, and then the Fed keep cutting rates and eventually it stabilizes. But if we look at 2008, which was the next recession, as soon as the Fed used the Fed balance sheet, we pretty much stopped in its tracks. Happened really quite quick after they did that. They cut rates first, didn't really help, because the banks had seized up. Then they used the balance sheet. Then they did it again in 2010, 12, 16, and then 18 was the Fed pivot, the Powell pivot, where they went from hiking to, oh my God, we need to cut.
Right, and Trump yelled at the guy. He says, you cut this out. You're killing my economy.
That's right.
Yeah.
And they were right. But he was raising rates because Trump had cut taxes, and it had given this boom, and they didn't want inflation. So inflation had gone up.
Yeah.
But Powell I need to do this, but the economy cannot take higher rates because everybody's so in debt and everybody's so old. That is